Welcome back. Now, time to discuss today's burning economic issues at the domestic commodities markets with the research analyst at the financial derivatives company, Temitope Olubile. Good morning, Temitope. Thanks for coming on.
Good morning, Visi. Thank you for having me.
Let's begin our conversation with oil prices. Of course, they're down to about $41 per barrel this morning. Tell us what's dragging down the prices at the market.
Okay, so, last week we were, a bit hopeful. It was climbing to 45, above 45. But now we're back down to $41 per barrel. And we see that, the first sign, it's a demand recovery concern basically driving it. And then when you see the leader, Saudi Arabia, cut its October selling prices to, countries such as Asia, that shows that even Saudi Arabia that price move shows that, they are becoming a bit weary of, the demand recovery curve. And we see that, as countries such as the US, one of the biggest users, approach the colder months, the driving season is off. And so that aspect of demand really goes off. And now the new hot commodity will be natural gas, for heating purposes. So that's really what is driving oil prices down.
And that's in addition to the rising cases in COVID-19.
Of COVID in some countries, the US, India, Britain, we see that the cases keep climbing. They are yet to flatten the curve. So that is what is driving oil prices down right now.
What about international flights now, which resumed back home here at the weekend? Of course, it has led to a jump in the demand for Forex. How's that coming up, especially after the CBN resumed the sale of Forex to BDCs yesterday?
Of course, so, the main economic concern for resumption of international flights was the Forex impact. And, the analysts were right in terms of the direction the Forex will go. Yesterday, we saw that, the CBN resumed sales to the BDCs, but the sales were what we'll call not enough, inadequate, right? So you see that, about $51 million, was sold across over 5,000 BDC centers, and that was, coming down to what? Maybe 10,000 per BDC center, and that was basically not enough, right? So we see that for travelers, we're now going back to the parallel market, and of course there will be the premium. There will be, the increased pressure at the parallel market was what led to Naira crashing to 445 Naira for $1 yesterday, and we can expect more pressure on that side of the market, on the parallel market side, even though, the I&E window seems to be doing okay right now, but the parallel market will remain, there will be increased pressure as, we go further.
So where do you see the currency trading at with the pressure?
I mean, the pressure, I think, should increase or should force an increased sale to the BDCs. As long as there's a supply, as long as the supply is able to meet the demand will still be there. But the problem now is that the fact that the supply is not matching the demand. So, but with oil prices trading down, we have that, supply concern, right? So, but going forward, if the supply can match the demand, we expect oil prices, Forex to remain stable. But looking at it, the Forex could come under more pressure, and we could see it trading maybe 450 to 470 Naira per dollar.
I'm sure that's not what many people would like to hear, considering the fact that a lot of us, or a lot of people were actually anticipating that when the CBN resumes sales to the BDCs, it will actually ease the pressure of the Forex market. But let's also talk about the impact of the recent price and the increase of petrol. Of course, many are still quite unhappy about that, and that's in addition to an increase in electricity tariff as well. But how has that impacted the cost of transportation and the price of commodities?
Okay, so, we'll start with the petrol price. That was done like last week. We saw that, increased to about 161 Naira per litre. And we see that, so far transport fares have been mixed in terms of direction. Some have said, it's still flat, because what had happened was after, when there was the restriction of number of passengers per bus, we saw that there was that hike in prices. But since the recent increase in PMS, we have seen like some have remained flat, some prices have remained flat, there've been a marginal increase in transport fares, so it's been really mixed. But going forward is what's important. Going forward, we can expect to see more hike in terms of transport costs, because the thing about transport fares in Nigeria is that it's usually sticky downwards, right? It doesn't go downwards as quick as it goes upwards, right? So when, we saw that, buses were taking more, passengers after, the ease of the lockdown, we didn't see prices come down to what they were before, the COVID-19 pandemic. So it's usually sticky downwards, but when there's things like an increase in PMS price, we tend to see prices react faster to those things, and it usually trends upwards, which eventually bores a hole in the consumer disposable income. And that's why you see a lot of Nigerians right now complaining about the increased pressure on their disposable income.
I can imagine. And then talking about the impact on commodities and the markets, what have we seen since this price increase took effect?
So you see that, from the farms, the commodities that come from the farms to, from the rural areas to the urban areas is usually via trucks, and those trucks are run via diesel, right? So there's that, we don't expect that. But in terms of maybe you're transporting goods within, Lagos area, you tend to use, these buses, that, maybe from Surah to Oyingbo or something, you tend to use buses, and that could now have an impact on, because by the time you're transporting and you're seeing that increase fare, you tend to pass it on to the consumer. So we can expect a marginal increase in some of these commodity prices, yes.
Now, let's talk about rice. Of course, part of your projections at the FDC is that the price of rice will spike as the supply falls. Of course, it's estimated that floods have washed away about 25% of Nigeria's rice harvest. Already, a bag of rice currently sells at between 27 to about,
28,000 for like a 50 kg
bag. So,
yes.
how much of increase are we looking at? Here?
So, what happened this year is that the rains were really, there was a diversion, or there was differences in terms of the degree and the extent of rains we saw in Nigeria this year. So over here in the south, we didn't see as much rainfalls as we would, the flooding impact. We didn't get that so much here this year. But over in the north, where this rice is usually grown, there's flooding, and Kebbi State, which is one of the major producing rice producing states in Nigeria, has seen that flood impact wash away about 25% of its projected harvest of about 2.5 million tons. And when you see, and now it washed away about 2 million tons. So all they're expecting from Kebbi, which is the major producing, is about 500,000 tons of rice this year. And so that is going to have, a significant impact. And recall, if you remember Nigeria's journey, we've had such a long and tough journey to self-sufficiency in rice. We've seen, on the policy side, we've done what we can. We've done, the banning of forex access. We've closed the borders to prevent smuggling. Even the rice importation via the ports, we've imposed a heavy levy on, rice importation. But so those are things we can control, right? But in terms of rainfall, in terms of the degree and the extent of rainfall, we can't control that. But what we can control is, our irrigation and our drainage infrastructure. So in a year where you see that, okay, maybe the rainfalls weren't so much, you can't control how much rainfall you get. But you can, if you have irrigation infrastructure in ground, you can fill in the gaps. If you have the drainage facilities on ground, the flooding impact will be minimal. So those are the things we need to start focusing on now. That's what this should teach us, to focus more on the infrastructure side. We've done the policy. Now it's time to also complement it with the infrastructure facilities.
And let's not also forget that, of course, we're getting towards the end of the year, when the end of year festivities will pick up, and that will also impact the price of rice in the coming days. So where are we going? Are we likely to see a double spike? I mean, it's just September and we're here already.
Yes, because right now it's going, like we said, is going for about 28,000 naira for 50 kg bag, and that's already a one-year high. So, and rice remains a staple, it would forever be a staple. And if, what happened was, the importation, you try to discourage that. So Nigerians now turn to the local production of this commodity, right? So now that the local production is being constrained by rain impact and the flooding impact, now it's going to be a problem, because rice will still remain a staple. So we can expect, that's why we're projecting that rice prices will spike. And like you said, as we approach the festive season, that's a staple for the Christmas across many Nigerian households. So, I mean, it's double digits now, and it will remain double digits for a while to come. Yes.
What about economic activities? Now, of course, they're gradually picking up as government continues to ease the lockdown measures. So what's your assessment of the activities so far, the FDC?
So, we see that, international flights have resumed. Lagos is reopening recreational centers, worship centers have opened. We see that, increased economic activities all across the federation. And, in terms of commodities, I mean, that's good for, commodities, in terms of, farmers being able to go to their farms, there's that, you can do that. There's no more interstate, restrictions. goods can flow, commodities can flow easily from the farms to the markets over here in the urban centers. So, when there's no supply bottlenecks, we see that, increased supply usually tends to bring down prices. So we can expect that impact of economic activities reopening on commodity prices.
That perhaps will bring some relief. Now, what's about the external reserves? They're up to $35.68 billion. What's behind the increase? Is it the increase in the price of crude oil that we saw last week that drove up the reserves?
I mean, that's what we're thinking and we're projecting it is because, external reserves have, the last update was as I think last week. So we get to see the impact of, this, $41 per barrel on external reserves. But so far, we think that is the increase, the rally we saw in Brent price last week that is really impacting on external reserves. So, I mean, that's some relief to Nigerians, to Forex, and that's relief.
So what's your outlook for agro-commodities in the coming days?
Okay, so the outlook is, two-phased. So in terms of imported commodities, your flour, we expect to see that the exchange rate pass-through effect will start to manifest in imported commodities. Now, in terms of domestic commodities, it's a bit mixed because, like we said, rice is, affected by the flooding impact. So that there'll be supply shortfalls in that. But in terms of other commodities, we're in the harvest season, we expect to see, more of these commodities in the market, and that should drive down prices. So bear in mind that, maize also, we saw that there was that, relaxation for, some 4 companies to be able to import maize. So we expect that to increase supply of maize, reduce the price of maize. So we see that there's that two-phased outlook for domestic commodities.
Now, let's just touch back a bit on the issue of power. Now, apart from the tariff increase that we saw, are there any other developments that is worthy of note in the power sector?
Right now, not much. We saw that, the recent power update that we saw was, below 4,000 megawatts, So there's that, there hasn't been much development in the power sector apart from the increase in tariff, which consumers are still complaining about, still, feeling the impact on their disposable income. But, there was that, we see that the FGN is trying to, douse the tensions that's coming from all these increased prices left, right.
Are they actually doing a good job at that?
I mean, what they're trying to do now is to reassure Nigerians of why this is needed now. Because Nigerians are of the opinion that it's the wrong time because, the COVID impact. So, but what the FGN's job now is to reassure us that, these reforms are necessary at a time like this when revenues are constrained. And bear in mind that there's still that trust deficit. Nigerians are, there's the trust deficit between the citizens and the government. What Nigerians really want is let us feel that, the fact that, there's all these taxations left, right? Let's feel the impact on infrastructure. And that's what the government was trying to do in their stakeholder meeting yesterday. We saw that there was that reassurance that, the money saved on subsidies would go into infrastructure, which will be, beneficial. So basically what they're trying to tell Nigerians is it's short-term pains, but, you would feel the long-term gains. That's their job now, to reassure us that these pains we feel now would be beneficial in the long term.
Many hope so. Thank you, Temitope Olugbile, research analyst at the FDC, for your time. We'll be right back in just a moment. Please stay with us.